Good morning. This is Monday Morning Coffee with Kyle and Ann. I'm Ann Rossley here with my dear friend and colleague, Kyle Harvey. And with us today is carolanne.bozarth of Key Mortgage. Good morning, Carolanne.
Good morning, ladies.
Today we're going to talk about mortgages, and this is a hot topic in a tight market. So,
and you only remember Carolanne from, was it a year ago?
Was it a year ago? I don't know if it's been that long. I don't know.
It's been a while. It's been a while, but we've been talking the last several shows about tight markets, low inventory, and how frustrating that is for buyers. So thank you so much for bringing this other perspective, the financing perspective, which we have been talking about being so important, right, so that buyers are as successful as they can possibly be. But Anne, we're going to start, as we do every week, with stats.
Yes, indeed. Let me pull up my screen here. And I don't have a lot to show you, but I have some interesting things I think to show you. Whoops, here we go. We're going to start off with lakefront neighborhoods, all properties. The month of January, it was strong. We did $493 million in sales. That is up almost 7%, which was up 41% from the year before. So very strong closings in January. If you look at a 12-month rolling, it's an even more crazy number. 51% up versus 2021 in the lakefront neighborhoods. And as you know, that means South Loop to Edgewater, the neighborhoods along the lakefront, and then just one to the west, like Westtown, Logan, Avondale. So huge.
But if you look at 2021, that had 3 months didn't it have the 3 months of 2020 in part of its rolling, or no? I think it did.
It would have had 1 month of 2020.
Okay.
Because it's going January. It's going
January.
February to January.
Okay. Who had the COVID numbers in it? The 2020 numbers?
Yeah.
Okay. Wow.
Yeah. All right. So I just did the numbers instead of a graph. This is the number of actual properties for sale in January each month. So how many properties were for sale in January of 22? How many in January 21, 20, and 19? In January, there were 13,760 properties in MRED for sale versus 2021, where there were 22,500. 2020, there were almost 36,000. So in essence, we had on the market in January of this year, basically 1/3 of the properties that we had on the market 2 years prior.
No, 1/3 fewer. Yeah. 2 years prior. Oh my God. I was just looking at 2021.
Yeah.
Wow.
Stuff. If you look at the lakefront neighborhoods now, we currently have 2,900 properties on the market, which is down almost 50% from 2021. Okay. So then the question is, how many new properties are coming on in January? And this is all of MRED again. It's not as staggering because the demand is so high. 11,200 new properties came on the market.
But look at the trend. The trend, it's still significantly down against the normal, which sort of rolls in the 15,000 range, give or take. We're down.
Right. Okay, properties closed by month. So here's the interesting thing, and some of my colleagues have really pointed this out. Our inventory is down, but somehow we're getting the sales. Sales in January weren't as high as January of 2021, 7,900 versus 8,200, but still strong in January of 2022. And look at the high. The most properties closed. It was a record month, June of 2021, 17,700.
And, because you previously showed some data that showed that the sales total, the volume total, for the high 400,000, it shows that there's a price appreciation in fewer closings than even 2021. There's a big price appreciation, and high price properties are probably affecting that too.
Absolutely right. All properties, 438 and pretty steady is the median sales price. If you look at single family only, $1.2 million, and look at that appreciation over the last year. Very strong single family market. The prices on condos is pretty steady. It looks like a drop, but you know, it's only 400,000 to 395. So
yeah, that looks like a steep drop. It's not.
It's not. Okay. Month supply of homes, lakefront, single family attached and detached, down 62% to 2 months worth of inventory. And as we've mentioned on previous shows, this high is because of the flight from the near north and loop to single family homes during COVID. But look, we've come back. The market has bounced back. I wanted to show you this because I thought this was interesting. This is the average number of showings per listing. And it looks like it's high, like, oh my gosh, there's so many showings. It's because of buyer demand. Yeah. With very few properties for sale, as soon as a property hits the market, all kinds of showings. So.
Yeah, that's an interesting indicator, because sometimes it looks like it takes forever to sell. Sometimes that number shows that it's been on the market for 10 months, and sometimes it shows that this was a hot property, well priced, and can be under contract in under a week and still have a really high number.
Yeah, so that's it.
Do we have a sense of days on market, or does all of this indicate that the days on market is lower and lower and lower?
I looked at that, and I did not see a strong trend one way or the other.
Got it.
And I think that's in part because there are some properties out there who are not priced right, and they're not selling.
And
so, if those properties are gone, we'd have zero inventory. Right.
Yeah, no, it's so I think we need to summarize. 1, this is a market without a lot of inventory. 2, and you just brought it up, to be successful in this market and to get all of this appreciation, you have to price it correctly. This is not free money market. This is not price at anything and people are going to take the house off my hands. This is a largely transparent market because consumers have data on their phones to judge properties. They have pictures and they have prices, and they can do their own research. Now, that data is not necessarily information or informed, but it will prevent the sale of properties that are not correctly priced, and that you just mentioned. So we'll be, being smart is still the right way to go. Okay, Carol-Anne.
Yeah, let's bring Carol-Anne into the conversation.
All right, I'm ready.
So Carol-Anne, you're probably aware, because I know you watch our show, that the last 2 episodes we talked about how to buy in a tight market and how to sell in a tight market. And when we talked about buying in a tight market, we talked a lot about being pre-approved and getting your ducks in a row. And I'm guessing you've been really busy lately writing pre-approvals.
Yeah, I sure have been. I think obviously, one of the biggest things about being ready in this market that I will say is having a solid pre-approval. We all have seen the type of pre-approval that you can get by entering some numbers into a, let's call it maybe Rocket Mortgage site where it'll spit you out a letter. I would say that most real estate agents would see that and maybe request that you get a full pre-approval. And I think one of the questions for agents, when you do get a pre-approval letter from a client from maybe an institution that you don't recognize or an online lender, I would definitely ask your client, did you have to provide any documentation to get this pre-approval letter? If they say no, then you're probably you need to plan B, either go back to that lender and get ask for a full documentation pre-approval. And then, the other thing about that is it's never too early. Like, before people go out looking. I can't tell you how many times I get calls from clients. It's like, well, it was just our first day out. We were just going to go and check it out. And then they need a pre-approval, like in 5 minutes, which, we can do, but it's not ideal. And it's not ideal for everybody involved, the agent, the client, the lender. It puts a lot of pressure on everybody. So I would say before you step foot out, I mean, that's the thing. Everybody's on Zillow these days looking at properties. But when you actually say you're going to go out with an agent or you're going to go to some open houses, you should already be pre-approved in this market. Don't mess around. Yeah.
Right.
Well, I think maybe if you could tell us what the process is and what they need to start to gather now, because I think people think, well, what? How do I do this? So just give us a little bit of how much time and all of that.
Sure. Okay. So for me, this is how I operate. I'll have one conversation with the client, get some of their, their story, their information. I will then send them to our online secure portal where they'll complete an online application, which will take about 10 minutes. I will then do a soft pull on their credit unless they're ready to make an offer. If they're not ready to make an offer, I don't run credit right away. Soft pull will give me all the information that I need without hitting their credit, just in case their credit score is borderline. You just don't want to keep running it. So I will do a soft pull. And then there's 3 documents that I need in order to issue a pre-approval. And I, of course, always let my clients know this is just the beginning. You will need to provide a lot more documentation. But to get this letter, I need 2 years worth of W-2s, your 2 most recent pay stubs, and the most recent bank statement for any account that's going to be used in the transaction. Now, what Key Mortgage has, which is kind of nice in our online application, we have the ability for the client to link their bank account for a one-time asset verification, which is nice in the pre-approval stage. Then they don't have to upload any bank documents. So essentially, if you're in a rush, in a pinch, and you need a pre-approval with our system, it's just the W-2s and the pay stubs. And if they link their account, we're good to go. So then I run everything. So when I get all that information, the process of looking at the numbers, right? So looking at their debt to income ratios, and then I run it through our automated underwriting system, and I look to see if I get an approval. And that's the one thing that I think that is really important when you have somebody who's maybe tight on their numbers. And I think it's maybe a lot of things that lenders don't actually do, but it's the most important thing, because ultimately when they go under contract, you enter the address into your system, you have to run it through Fannie and Freddie's desktop automated underwriting system. So if you've already run it with the numbers without the address, because you don't know if they're going to go under contract, and you already have an approval, you're good. So what happens when they go under contract? Now you run it and something isn't working, then you're in trouble.
So what would go wrong? I don't understand. What could go wrong?
It doesn't like the profile. There's either not enough reserves. The debt to income ratios are too high. There's like a combination of factors that the system analyzes and looks at and decides whether or not this loan would be approved. Okay. So that's really, really important, really important. So that's pretty much it on the pre-approval. It can be done rather quickly, but like I said, the earlier the better for that.
So we have had a crazy month for interest rates.
Yeah.
Where are interest rates now versus where they were first of the year?
Okay. So interest rates is a hot topic. And I'm glad that you brought it up because it's really hard when you have interest rates on the front page of, newspapers, which was the case, about 2-3 weeks ago. It sends everybody into a tizzy. Okay. And so where are rates now? So rates now, of course, with the disclaimer that rates are very specific to the profile of the person in the file. I have locked probably 10 people in the last couple of weeks. Nobody ever, I would say, with scores above 740, single family houses, 3.625, 3.75, nobody at 4. So we are still under 4. Condos are creeping up, 3.875. And these are for 30-year fixed. So I think there's a couple things I want to talk about for rates, because people can get a little bit hysterical and kind of get caught up and overreact about rates. And so I think that as agents and loan officers, we need to be strategic, because we can use the fact that interest rates are going up to our advantage or to your advantage to get those people who are on the fence, let's say the renters who are like, oh, I'm not sure if I'm going to rent again this year. And the fact that rates are going up could motivate them, right? You could show them, because this is also the time, this actually just happened to me over the weekend. I had a client who was one of those on the fence, and lo and behold, he got a message from his landlord that his rent's going up, like significantly. So this is what's happening right now, is these people who are in the spring and summer rental markets are getting these notices. So he sent me a property, and this is a small, little 1-bedroom condo. But the point is, I did the math for him on this condo was going to be less, including everything, taxes, insurance, mortgage insurance, than what his new rent was going to be. And so, so we can use rates, the fact that rates are going up, to motivate those people. But then there's also, where we need to be careful when people are going to sit out on the sidelines because the rates are going up. And so we want to be strategic, talk people through it. Yes, rates are going up a little bit. And now is still a great time to make a move if you're wanting to make it. Don't let it kind of like cripple you and just stay, well, rates are going up, so I'm not going to list. I'm not going to move.
Well, you would sit on the sidelines if you thought they were coming back down. But have you heard anybody say rates are going to go back down lower than what they are right now?
No. So we're headed up. And so, but I'm just saying that, like sometimes people, when it becomes like in the news and people start talking about it like that, they can kind of get overwhelmed, or, like the fact of housing prices going up, they can take that conversation plus rates going up, and it can kind of, a little bit like deer in the headlights. Well, I'm just, this doesn't sound good type of thing. Right. And so, yeah. And so we're talking about, so let me just give you like, and I never like to, tell people that a little bit of an increase in rate, it doesn't matter, because it does matter. It's money out of their pocket. But on a $500,000 loan, a rate going up just an eighth is $35. And so that's the other thing too, I think, with clients is helping put into perspective what it means for them in a monthly budget, depending on what the size of their loan is. So it's $35 if it goes up an eighth. It's $70 if it goes up a quarter of a point. But most of the increases it's been steady the last, 15 to 2 weeks, I would say. And, our rate's going to go up. Yes, they're going to go up through this year. And I think that, that everything is still under 4%. So I feel like, let's just get out there. Let's get these buyers in, under contract, get their rates locked. And, that's kind of, it's like, yes, rates are going to go up, but we're still at historical lows.
Right. And also getting in now for those people who are like, let me see where rates go in, in the next 2 years. Getting in now, you can refinance in the event that rates go down.
Right.
I mean, it costs you something, but rent is not going down. Rent is going up.
Right.
And once it's up, it will go up again. Whereas locking and securing your monthly outlay for housing is the way to go.
Exactly. Exactly. And then, the other thing, I kind of want to segue this into, a program that we have now, because some people, a lot of times with these renters, they don't have the down payment, right? They're paying $3,000-$4,000 a month in rent because they don't have a down payment. We have, obviously on a non-jumbo, a conforming loan, which we all know is now anything under $647,000, 3%. But we now also have two jumbo products. One, believe it or not, this is a new investor that Key Mortgage has. We can do on a single family home, a jumbo loan up to $900,000 with 3% down.
Wow.
So, I mean, an $800,000 property, you can put down $24,000. It's, and again, you have to have a credit score above 740. You have to have 6 months reserves, but still, I mean, this is like an incredible, opportunity for maybe that couple that's going to sell a condo and wants to get into the suburbs in a single family home and just doesn't have the down payment for a jumbo. So that's great. And we also have 5% down on a jumbo loan as well. So, and it's funny because I just did a pre-approval for Bank of America executive who wants to buy something before he sells his condo, and not even his own bank would do a 5% jumbo for him. So
that's a great story.
On Key Mortgage. Yay.
That's right. Yeah. So let's see. What else do we want to talk about? How about some tips and some things about loan programs? So one of the things that I'm a big proponent of having a very thorough, maybe consultation with your lender. So it's important not to just, tell somebody, okay, here's, and especially the last couple of years, right? I mean, we all got in the habit 30-year fix, right? Everybody was doing a 30-year fix. Nobody was talking about ARMs. Nobody was talking about, it was almost like a rubber stamp. Well, now I think it's really important to have a conversation with your lender about what's the best option for you, right? Rates are ticking up. So for example, I've locked recently several people in our 10-6 ARM product, which is a 30-year, it's a loan that amortizes over 30 years. So your payments are like 30, over 30 years. But the first 10 years is fixed, the fixed rate. And then after 10 years, it adjusts every 6 months. Well, as you know, there's a lot of people, especially in the city of Chicago, that pretty much know they're not going to maybe be in a place for 10 years. And so the 10-6 ARM right now is significantly lower than the 30-year fix. And so that's a good product for people. Again, a buyer isn't going to know that, right? And so having a conversation with my clients, which is what I do, is talking about, well, all those things. How long do you think you're going to live there? And another way to look at where, because of rates too, is like maybe a 15-year might be better for you. The 15-year rate, if you can support the payment, the monthly payment, the 15-year rate's lower. So looking at strategically, analyzing each client's situation, I think is important, and having a conversation with your lender about which programs are best for you right now. And then the other thing too, I wanted to talk about as far as programs. Well, actually, I want to go back to the rates and locking in a rate, because this is another thing that clients, they go under contract and they're like, okay, what about locking in rates, because everybody's talking about rates going up. And so for you guys as agents, another thing you want to consider when you're looking at closing dates in this market, if you have a client that is maybe already talking to you about being anxious about the interest rates. So you want to close. We have, and different lenders have different, but typically a 40-day rate lock, a 55-day rate lock. Anything over 55 days, they're going to have to wait to lock in their rate. So that's one thing that, you know, it's also hard in this market. I have a client right now who, because the seller didn't have a place yet, right? And so they didn't want to close. They asked for a May close. And so they really wanted this house. There was 10 people, you know, that made an offer, and they were the most flexible buyer. So they're under contract now, and, you know, they're watching the rates go up and they're like spinning their wheels a little bit. So maybe solutions about rent backs for you guys, like closing and renting back for 60 days to advocate for your client. That's an option too, about locking in rates. And I think too, it's also very important for clients to be getting educated from their lenders about when to lock in, and, you know, all that good stuff. So, yeah.
Those are interesting programs. You know, like you had said, I'm kind of a 30-year gal, so that 10-year arm is very interesting.
Yep.
Particularly with first-time buyers that we know are going to outgrow the property within 5 years.
Exactly. Yeah. Yeah. And then one last thing I want to say, and I know you guys know this about me, but I also think that I want to talk about how anybody that doesn't even have an in-house lender could take advantage of this. And also, when you guys are working with, you know, you don't always get to work with Key Mortgage because your clients come to you with their own, you know, lenders. In this market is very important. So as soon as my client makes an offer, I literally within 10 minutes, and it doesn't matter if it's Sunday night, which you guys are writing offers at Sunday nights.
Yeah.
I will call the listing agent, and I will talk to the listing agent about my client and all the strengths about my client, about the fact that we're an in-house lender. This is going to close very smoothly. Talk about, like, you know, whatever it is that I can talk about my clients, great jobs, great credit, you know, all of that makes a difference. I've had so much feedback in the last couple of weeks from listing agents that really appreciated that they didn't have to track me down, that I literally called within 10 minutes of them receiving the offer. And they oftentimes will have questions for me, and I can give them some insight, you know, and sometimes listing agents will ask me things that they won't ask the seller, the seller's agent. I mean, the buyer's agent. So having that conversation and then being able to go back to my agent partner and say, oh, I got a little tip. I got a little insight. He was saying that, you know, looks like you guys are the most flexible out of everybody, or whatever. So what I would say is, if you have a relationship with your client's lender, ask the lender to make the call. And if you don't have a relationship with that lender, ask your clients to ask their lender to make the call. Because I do think that it can help in this market. And of course, I'm going to push, you know, a little plug for Key Mortgage, because I do think that having an in-house lender is another thing that makes your offer just a little bit stronger.
Right. So I have one quick question to ask you. You seeing any appraisal issues as people are coming in with the purchase prices over the asking?
Have not.
That's good.
Yeah. My experience as a listing agent, everything's appraising out.
Mm-hmm.
Yeah. It's been great. I mean, I've had a couple that, you know, everybody was like worried. Yeah. And then, you know, I just got it last week and I'm like, oh my gosh, we're good. Yeah. So I don't know. I think the appraisers they're catching, you know, they catch on, they're good. You know, they watch the market. So yeah, I have not had any issues with that, which has been nice.
Yeah, they're aware that this is a rising market, and
yes,
can't put the kibosh on it.
Exactly.
And that they're appraising on a property that did receive multiple offers.
Well, if it has, that was helpful to me in a property that was hard to appraise. I told the appraiser, I have multiple offers. I have a backup offer if this doesn't go through. And he said, okay.
Right.
You know, that is helpful.
Yes, definitely. Definitely. Mm-hmm.
All right. Anything else, Carolanne, we need to know about? Quite a bit today.
Yeah, I know we did. I talked a lot. Sorry. No, I think, you know, obviously that having a very thorough pre-approval will help you in the long run. You know, just making sure, even that simple question, hey, did you have to supply any documents to get this pre-approval? I mean, you know, it's something that you guys wouldn't necessarily think to ask, but it's a good question to ask. And you know, also if you're skeptical of the pre-approval, just call the lender, you know, and just, you know, hey, did you get all their documentation, or did you run it through the AUS? Did you get an approval? And, you know, if that person starts stumbling and what, like,
right.
Yeah.
And that's why we love working with you, because we know that the buyers coming from you are good to go.
Absolutely.
I also want to say, one of the things especially with younger people, younger buyers, of whom I have a couple, they're reticent about reaching out to a lender for a pre-approval. There's nothing to fear. It's going to be fine. It's not going to hurt your credit.
Yes.
Do it.
Yes. And so, you know what, Kyle, with those clients, if you want to soft sell it, you say, I have a lender who will provide you with a consultation.
Yeah, consultation.
Consultation. It's just, and it's true. It's I talk to people that all the time that just want to explore whether or not they're ready, and I can talk to them about credit. I can talk, you know, just there's a whole gamut of things, and I think that the agents find that those people who are nervous like that, the word consultation helps. Because they may not want a pre-approval yet, right? But wouldn't they like to know? This is the other thing too. Sorry, do I have a minute? Okay. Yeah. So the other thing too is what's really important in when we're talking about interest rates and monthly payments, right? Is a lot of people come to me and they're focused on their purchase price. And what I say is, well, let's not talk about purchase price. Let's talk about what would you like your monthly number to be? Like, what's your ceiling? And Anne, you've seen my emails with this. Mm-hmm. And I take that ceiling number and I work backwards for them. And I give them the numbers of the price that they need to stay in and the taxes and the HOAs. And so, you know, I think a lot of people, when they start out, they're always, especially if they're on Zillow or whatever, they're just like picking out a purchase price. Right. And so when you're educating and when I'm doing a consultation, I'm talking to them about like their budget. I'm talking to them, you know, what do you really want to spend? And then I give them the numbers so that they can be looking at properties in a more educated frame of mind, so that they know how much they have left over to spend on taxes and HOAs. Because as you guys know, that's a big portion of that monthly payment.
Sure.
So that's another part of the whole conversation about let's just talk about, you know, like, well, what's your rent now? And then how much more could you afford? And so, yeah, so focusing on the monthly number and helping them figure out, you know, what that correlates to in a purchase price is really important in the beginning stages. And it helps you guys as agents, right? And I mean, like, it helps you know that, oh, this property doesn't work because the HOAs are $1,000 and Carolanne said she's only got room for 500. So,
right.
Yeah.
This was so great. Thank you so much, Carolanne.
You are so
yeah. As the market changes,
absolutely,
we'll talk about what to do next.
Right.
That sounds great. That sounds great.
Well, everybody, thank you for watching this week's episode of Monday Morning Coffee with Kyle and Ann, today with Carolanne Bozarth of Key Mortgage. And if you are looking for a consultation or a pre-approval, please reach out to Carolanne. We'll put her contact information in the comments below the video. And watch for us next week on Monday Morning Coffee with Kyle and Ann. Thanks a lot.
All right, girls, have a great day.
Thanks, you too. Bye-bye.